HUL is also expecting flat to low single-digit growth in the second quarter of FY26 on the back of GST rate cuts. Now, this is mainly because the company expects temporary disruption in its business. So, what do the brokerages make of this?
Well, a big announcement has come in from HUL, which is India's largest FMCG company. Now, because of this GST rate changes, they are seeing some action when it comes to their inventory. Specifically, it's inventory destocking that is expected to impact their revenue growth. In fact, the company is expecting their revenue growth to be around flat to low single digit. Now, because of this, there could be some impact on the financials, and hence the company has come out with this announcement. Now, if you look at brokerages, Jefferies believe that these announcement that has come in from HUL side in fact could impact other FMCG companies as well in the second quarter of FY23. However, they say that the quantum of impact could vary depending on the company's size and depending on the portfolio which gets impacted because of this GST changes. In the medium term, however, they are expecting that there could be a strong volume growth that could happen for these FMCG companies, and they also believe that the revenue growth for other retailers or quick commerce company could also be negatively impacted in the second quarter of FY26. Now, when it comes to Morgan Stanley, they believe that the consolidated business growth, which is expected to be around flat to low single digit, is much lower than what analysts were predicting earlier, so that could be taken negatively by the street. And secondly, they also say that given the fact that the company is releasing this first ever post-quarter update is a good change from the market point of view. So that is something positive that Morgan Stanley is saying on the front of HUL.
Absolutely. Thank you so much, Somit, for bringing us those updates there. And on the same, we are being joined by Mayuresh Joshi, Head of Research, Marketsmith India. Hi, Mayuresh. Welcome to the show.
Hey, afternoon.
Yes, so Mayuresh, HUL is saying, that volumes will be flat to low single digit. So is it in line with your expectations or is it much below?
No, more or less in line, because I think it was always expected that Q2 is a seasonally weak quarter with monsoons, etc. And with the GST rationalization benefits expected to kick in by the end of this month, there is a lot of rationalization that probably needs to be done, either with the existing inventory or adjusting to the new prices as well. So I think not too surprised. I think it's always expected to be a softish quarter, but I think the impact of GST might be very, very positive. So the management commentary it will be very interesting in terms of how volumes are expected to play out in the second half.
So, Mayuresh, what is the kind of impact you expect from the other FMCG players as well?
I think quite similar. I think there might be a few outliers as far as this pack is concerned, but more or less, I think it will be a quarter of consolidation for a lot of these players. You've actually seen input cost inflation actually moderate to a certain extent in this quarter itself, and therefore that is a respite, specifically in terms of the operating front. However, from a volume growth perspective, reflecting on sales, it will still be a little bit sluggish because, as I said, I think seasonality does play in with monsoons coinciding, and monsoons were heavy in certain places. At the same time, I think with GST rationalization and the moves thereof, the turnover, the inventory and the expectation in terms of sales picking up might actually start kicking in from the third quarter itself.
Okay, so Mayuresh, few analysts are expecting that even retailers like DMart and also quick commerce players like Swiggy and Eternal will also see a negative impact in quarter two due to this GST. So do you concur with that view?
I mean, it'll be softish. I mean, you cannot have an exponential growth number expected in Q2 because I think the benefits itself have not kicked in, right? I think the large expectation will be that benefits will kick in only in the beginning of the third quarter. And therefore, I think it is very, very logical to presume and assume that quarter two will be a okay quarter for most companies, including, I think, food delivery companies as well. But I think the kicker is going to come in from Q3. I think everybody probably understands that.
And also, Mayuresh, do you see any sort of margin impact on the other FMCG companies as well?
No, I think, as I said, input cost inflation were far better upon a quarter-on-quarter basis sequentially. And therefore, I think margins should relatively hold out. Obviously, I think the entire gamut of expectation in terms of grammage reductions which have happened will start readjusting in Q3 with GST rationalization cuts expected to take place. But I think the entire top down to bottom up approach when it comes to either the sales growth, volume growth, pricing, margin performance, I think it should probably just bottom out in this quarter itself. And in most commentaries that you'll probably hear, you will hear very, very positive commentaries on all these aspects as we head into the next few quarters.
Okay, thank you so much, Mayuresh, for that, and thanks for your time. And it's very valuable that you shared your insights with our viewers.